We all know that crypto market sentiment hasn't been great lately, and that's largely because Bitcoin has been having a rough old time of it. Investors have gone full risk off, and even Strategy's MSTR stock has taken a hit, and this matters more than you might think. Historically, Strategy has leaned heavily on MSTR to attract new investors and raise capital to buy more BTC. So, with MSTR underperforming, you'd expect fundraising to be harder than ever. Despite all this, though, Strategy has been buying up billions of dollars in BTC lately. It kickstarted the year with a purchase of over 1,200 BTC for a modest $116 million, and the company went on to spend a massive $1.25 billion on the 12th of January to buy 13,600 BTC. Strategy doubled down just 1 week later, acquiring over 22,000 BTC for $2.1 billion, making it the largest purchase since February last year. Then, on the 26th of January, Strategy spent another $264 million to buy just under 3,000 BTC. This means that in January alone, Strategy spent a whopping $3.76 billion to accumulate over 40,000 BTC. This accumulation was largely funded by the company's at-the-market, or ATM, program, where sales of the company's stock were sold off to raise capital for more BTC. Most of this ATM fundraising was made through sales of the company's primary stock, MSTR, along with additional support from sales of its variable rate perpetual stock, Stretch, which uses the ticker STRC. For context, STRC is one of several preferred perpetual stocks introduced by Strategy in July last year, along with Stride, STRD, Strike, STRK, and Strife, STRF. However, most agree that STRC is the only one really worth paying attention to, and that's because it offers adjustable dividends, which are currently over 11%. Not too shabby. Anyways, in February, Strategy slowed down its spending to $373 million to accumulate a little over 5,000 BTC. One notable purchase was for 855 BTC on the 2nd of February, when Bitcoin had fallen below $75,000. For Strategy, this was a big deal because the company's average purchase cost for its entire BTC stash is around $76,000. And as a fun fact, the buy of 592 BTC on the 23rd of February also marked the company's 100th purchase. Congratulations all round. Anyway, in both cases, the purchases were made entirely through ATM sales of MSTR, and both fell below the company's average cost basis. The buying ramped back up again in March for Strategy's 101st purchase as the company bought over 3,000 BTC. This was made using mostly funds from ATM sales of MSTR, along with a little extra funding from ATM sales of STRC. Then, things got truly crazy. That's because on the 9th of March, Strategy spent a mind-boggling $1.3 billion to acquire almost 18,000 BTC. And again, this was done using funds primarily raised through MSTR with support from sales of STRC. That said, STRC played a larger role this time around, with record sales of around $378 million, much higher than in previous rounds. But this was nothing compared to what followed on the 16th of March, when Strategy spent $1.6 billion to accumulate over 22,000 BTC. But it's not the dollar value that makes this purchase crazy. What's really crazy is that 75% of this was raised through sales of STRC, marking a notable shift in the company's fundraising methods. Even so, its latest purchase of just over 1,000 BTC was made exclusively through sales of MSTR. So, this brings Strategy's March total to 44,377 BTC accumulated for a total of $3.13 billion. This means that Strategy's total BTC stash is sitting at a mind-melting 762,099 BTC as I record this, accounting for 3.6% of Bitcoin's total supply. And what's nuts is that they're not slowing down anytime soon. It'll probably be higher by the time you see this. In fact, the company is targeting 1 million BTC by the end of 2026. Only time will tell whether it manages to hit that goal, but as you'll soon see, it could be more likely than you think. And by the way, if you're enjoying the video so far, then show it by decimating that like button. And if you're looking for an easy way to keep up with the crypto market, then you need to know about the Coin Bureau's Telegram channel. That's where we share the latest breaking news, provide deep dive alpha, and give you the most important market updates, all pinged directly to your device so you don't miss a thing. So sign up today using the link in the description or this QR code on screen. Now, this all sounds great in theory, but there's just one problem. We're now in a bear market and things ain't looking so hot. Normally, companies would hunker down, protect their reserves, and play it safe. And yet, despite the ongoing crypto downturn, Strategy is doing the opposite. It's accelerating its BTC accumulation. And naturally, this makes you wonder where Strategy, or indeed Michael Saylor himself, thinks BTC is headed in the coming months. Well, while he hasn't laid out any specific price targets, Saylor's staying characteristically bullish. Heck, in February, he even posted on X that, quote, "If it's not going to zero, it's going to 1,000,000. So, Saylor is sticking to his guns and Strategy isn't selling anytime soon. But with the kind of runway he claims to have, why not just sit tight and wait for the market to recover? Why spend all that cash and energy scooping up more BTC in the middle of a bear market? Well, there are two big reasons. And the first is the obvious one. Strategy is simply buying the dip. Their whole business model revolves around BTC as the main reserve asset, aiming to maximize Bitcoin per share, or BPS, for shareholders over the long term. And naturally, lower BTC prices mean they get more Bitcoin for every dollar spent. And we're talking billions of dollars here. For perspective, in 2026 alone, they've already snapped up nearly 90,000 BTC, way above their usual pace. And that puts them well on track for the ambitious goal of accumulating 1 million BTC by the end of 2026. And when you do the maths, hitting that target only requires about 6,000 BTC per week on average. So yeah, they're right to make the most of any dip. The second reason, though a bit less obvious, is that consistently buying, especially now, sends a clear signal of confidence. If they pause these purchases, it could create a perception of weakness, something Saylor and the team obviously want to avoid. But let's be real, investors aren't exactly lining up for a risky, underperforming stock like MSTR, especially if the bear market drags on. No worries though, because it looks like Saylor has cooked up a new plan, one that could let them raise more capital than ever before. On the 23rd of March, Strategy revealed plans to raise a whopping $44.1 billion to buy even more BTC. $21 billion of that will come from those ATM sales of MSTR stock, while another $21 billion will come from a new series of STRC. The remaining $2.1 billion will be raised through another round of STRK. Notably, unlike in the past where Strategy leaned on big, infrequent capital injections, today the company has revamped its ATM setup to sell shares in smaller, incremental amounts. This gives Strategy way more flexibility, allowing it to issue stock during periods of price strength rather than being forced to raise large sums all at once. In turn, this helps Strategy buy BTC consistently, even in volatile or bearish market conditions. But the biggest shift is Strategy moving away from its common stock, MSTR, and leaning more on its preferred shares, mainly STRC. As you'll hopefully remember, these shares pay monthly dividends, with STRC currently offering a hefty 11.5% at the time of shooting. That makes it super attractive to income-focused investors, letting Strategy raise capital quickly even when the underlying business isn't performing at its best. And moreover, it creates a win-win scenario. For investors, an 11% dividend from a company that performs like a leading S&P 500 stock is hard to pass up. For Strategy, issuing preferred shares means less pressure to sell more MSTR common stock, helping limit dilution for existing shareholders, at least in the near term. So then, how much BTC could Strategy realistically grab in the short term? Well, with Bitcoin sitting at around $68,000 at the time of recording, their planned $42.1 billion haul could net roughly 620,000 BTC, assuming prices don't swing too much beforehand. That would put Strategy well past its goal of 1 million BTC by the end of 2026, taking its total stash to roughly 1.3 million BTC. That's a 77% jump in its treasury in just a year, meaning Strategy would control around 6.4% of Bitcoin's total 21 million supply. Truly wild numbers. Now, Strategy's hoarding approach has raised some eyebrows, with the biggest concern being shareholder dilution. Over the years, the company has issued waves of MSTR stock, and critics argue that this dilution could outweigh the benefits of buying more BTC, especially when MSTR trades near or even below the value of its holdings. As such, issuing new shares could actually shrink the Bitcoin per share, or BPS, instead of boosting it. Some argue this could create a negative feedback loop, where issuing more MSTR lowers the MNAV premium, making the stock less attractive, which makes raising capital harder, slowing down BTC purchases, dropping BPS even further, and, well, you get the idea. Another big concern is Strategy's high cost of capital, mainly from its dividend load. Since the company has leaned on STRC as its main funding method, which will remind you pays dividends of around 11% currently, the total dividend and interest obligations have now shot past $1 billion. That's a staggering number by any measure. For what it's worth, though, the company keeps a cash buffer of roughly $2.2 billion to cover these obligations. But critics question whether that buffer can grow or even be sustained, since the software side of the business generates fairly limited cash flow. For context, MicroStrategy, as it used to be, started out as a business intelligence software company long before it began hoarding BTC in 2020 and eventually changing its name to just Strategy. The bottom line, though, is that offering a high yield on STRC to fund purchases of a volatile asset like BTC is both risky and expensive. If BTC doesn't climb faster than the cost of this capital, the burden could quickly become unsustainable, potentially forcing the company to issue even more stock or, in a worst-case scenario, liquidate some of its BTC holdings. That said, Strategy CEO Feng Lei made it clear back in December 2025 that the company would only be forced to sell BTC if its price entered a decades-long slump. But this ties in to the third concern, which is whether Strategy's all-in approach to BTC is really sustainable. To pull off the $44.1 billion raise, there has to be sustained investor appetite for MSTR and STRC. But if the MNAV of these stocks starts sliding, they're going to look a lot less attractive to investors. In that scenario, raising more capital to buy BTC could actually backfire, pushing MSTR and its preferred stocks lower. That's especially concerning since MSTR tends to underperform BTC during bear markets, just like it usually outperforms in the bull market. And then there's the "are they going too far" question. Building a whole business model around a volatile asset like Bitcoin is risky enough, but it also means BTC's supply is getting more concentrated. Right now, Strategy holds over 762,000 BTC, about 3.6% of the total supply. And as we mentioned earlier, this could grow as high as 6.4% in the not-too-distant future. Naturally, this makes Strategy a Bitcoin whale with potentially massive influence over BTC's price and arguably over the rest of the crypto market by extension. So long as Saylor sticks to his word and never sells, then we should be fine. But this requires heavy amounts of trust and elaborate financial engineering, and to be frank, well, trust isn't what this industry was initially founded on. Anyhow, in response to criticism like this, Saylor and Lei insist that everything's going according to plan. They point to the lack of forced selling, manageable leverage, and a long-term horizon measured in decades rather than months. Ultimately, though, whether Strategy's aggressive BTC accumulation is visionary or reckless comes down to one thing. Can BTC's long-term gains outpace the rising cost of capital needed to keep buying it? Now, while Strategy is perhaps best positioned to weather the storm, the same can't be said for the hundreds of other Bitcoin treasury companies that have popped up in recent years. For context, there are now 192 companies holding at least one full BTC, with many companies created as pure-play treasury companies following a similar playbook to Strategy's. The problem is, many of these firms that have built strategies around holding large Bitcoin reserves have been shaken out by the recent market volatility, and their stock prices have consequently taken a beating. As such, many have massively underperformed not only the stock market, but Bitcoin and indeed the broader crypto market too. This has pushed many Bitcoin Treasury companies to trade at deep discounts to the market value of their BTC holdings. In other words, they now have a negative MNAV, meaning the equity is valued at less than the BTC on the balance sheet. Once this happens, the core mechanics of the company's strategy start to break down, as issuing equity to fund further BTC accumulation results in heavy share dilution, often with very little payoff. This dynamic is precisely why many analysts believe only a handful of Treasury companies will survive. The rest risk falling victim to a reflexive death spiral where BTC's price falls, like it already has done, causing the company's MNAV to disappear. This then makes fundraising almost impossible. Then, when the company's debt reaches maturity, margin calls are triggered and the company is forced to liquidate its BTC to raise the cash needed to service these debts. This selling then creates panic across the market, driving BTC's price down further, dragging the company's MNAV down even further, and the cycle starts again. And not only that, but the BTC already being held by the company poses a capital liability in itself. That's simply because corporate BTC hoarding doesn't generate any yield, so their holdings are essentially passive. In other words, their BTC simply sits there in the company's reserves, and the value of these reserves is vulnerable to any market volatility. So then, many smaller Bitcoin treasuries are at risk. But what does any of this have to do with strategy? Well, even though Strategy's balance sheet and scale are in a league of their own, market participants tend to treat Bitcoin treasury companies as a cohort. Essentially, when a smaller or weaker treasury firm trades at a steep NAV discount, mismanages leverage, or even sells some BTC, it quickly sparks bearish sentiment. And like much of the crypto market, that sentiment spreads across the sector. Even Strategy isn't immune here. But that doesn't mean the company is mismanaged, just that sentiment around treasury firms can weigh heavy, especially when BTC slides down and to the right. So, what does all of this mean for Bitcoin in the coming months? Well, while Strategy is seemingly going through a rough patch right now, it's really less about the company and more about BTC's price performance. And let's be honest, if we were still in a bull market, this conversation wouldn't even be happening. Strategy would still be raising massive amounts of capital, its MNAV would be climbing, investors would be loving it as a leverage way to get indirect exposure to BTC, and all would be right with the world. But unfortunately, well, we're not in a bull market anymore. So, should we be concerned? Well, the answer depends on your time horizon. If you're only looking at the state of the market right now, then the idea of spending billions of dollars on an asset in the red could be a cause for concern. The thing is, though, most Bitcoin investors are in it for the long term and are able to zoom out enough to understand that over time, BTC is the best performing asset of all time. In the long run, a bit of downside has never stopped BTC's long-term trajectory, which remains up and to the right to this day. Strategy is no exception to this, and the company's management has repeatedly made clear that they're working in years and not weeks or months. What this means then is that Strategy is using its engineered capital to scoop up as much BTC as possible during the dip, which I'm sure we'd all do if we had a few extra $1 billion lying around. But this all relies on a blue skies scenario. What if things don't go to plan? Is there a chance that Strategy could be forced to sell its BTC? Well, to understand this, we need to take a quick look at the company's debt structure. As we've seen throughout this video, most of Strategy's fundraising is done through ATM programs. This means that most of Strategy's debt is in the form of convertible notes, and this is key. That's because none of this debt matures until 2027 at the very earliest, with some not maturing until 2032 or later. Even with its earliest debts, Saylor has made it clear that BTC would need to fall to as low as $8,000 before facing any real pressure. In other words, no, the company won't be forced to liquidate anytime soon. And if you're wondering if BTC would still struggle if Strategy stopped buying altogether, The answer is also a resounding no. That's because, according to a report by TD Cowen, Strategy accounts for just 3.3% of BTC's weekly trading volume. Yep, you heard that right, 3.3%. With Strategy's purchases constantly making headlines, it's easy to forget that Bitcoin is a global asset with billions in daily trading volume. Sure, Strategy is a huge whale, but it's far from the only one. Between spot Bitcoin ETFs, major mining operations, and even nation-states, it's not like these coins would struggle to find a new home. Okay, now we want to hear from you. Is Strategy taking it too far, or is Michael Saylor still the patron saint of Bitcoin? Let us know your thoughts in the comments below. If you're wondering whether quantum computing poses a real threat to Bitcoin, then check out the video over here. And if you're wondering what other challenges Bitcoin could face in the near future, then check out the video right here. Okay, thank you all so much for watching, and I'll see you again soon. This is Guy, signing off.